Welcome to the Professionals of the Inland Empire show with your host, John Tulac.
Hello again, everyone, and welcome to Professionals of the Inland Empire, which we affectionately call PI. I'm John Tulac, international business attorney located in Claremont, California. That's the center of my global economy, just as you all have your own personal centers in whatever it is that you do. And it's my privilege to bring to you each week one or two professionals, usually two, who live and work in the Inland Empire. These are people with skills in practice areas that are really vitally important to you and your business. So it's good for you to get to know who they are and what they can do for you. So today, I invite you, as I always do, to sit back and relax for half an hour and enjoy a slice of pie. Here we go. My guests today are Rick Rael with Transworld. He is a business broker, and Matt Wilson, who is a CPA. And right in the middle of busy tax season, Matt's agreed to join us today. So, Matt, let's start with you. Tell us who you are and what you do and how you do it. What makes you special?
Wow, thank you so much for having me on the show today, John. This is great. So I'm a CPA located in San Bernardino. We work mainly with manufacturers, construction companies, and logistics companies here in the Inland Empire, working with small privately held businesses. And when we say small, we mainly mean family businesses. Most of our businesses are family related, and we aren't just located here in the Inland Empire, but we service clients all over the country. We started our practice 11 years ago. And currently we have 30 people working for our firm, and we have plenty of work and not enough people. The Inland Empire continues to grow and be a bright spot, and we really enjoy being here.
Indeed, that's the whole the idea of being here in the Inland Empire. You're away from at least some of the massive traffic that we have here in Southern California. So you mentioned specifically you work with family-owned businesses. So that's different, isn't it, than working for or with a company that isn't family-owned and operated. So tell us a little bit about the differences and why that matters.
Well, when we started the practice, my partner Maya and I had both worked for another firm, and we worked with governments, nonprofits. We did a lot of different type of work, but when you work with those types of entities, you're not able to service the clients that need you all year long. And so when we started this firm, that was a very distinct difference that we decided that we would only work with those types of businesses that are family owned. We would not work with any governments or nonprofits, so that we could really specialize and help those businesses grow their business. And currently, we're doing a lot of merger acquisition where they're now retiring and carrying on, either selling their businesses to the next generation or to other companies. So it's a really exciting time for us right now.
That's super. And there's so much more to being a CPA than simply filing tax returns. So, it seems to me that the consulting side of it is as vital, if not more so, especially for a family owned business in terms of helping them with their business planning.
You know, you're 100% correct. The best part of being a CPA is getting to know people, getting to help them, and watching them succeed. That is really the best part. Taxes are a commodity. Anybody can do a tax return, but if you can help a business grow and you can help a business be successful and transfer generational or to another company, that's really the benefit. That's the reward, is seeing these people succeed.
So the generational side of it is certainly something that a company needs to take into account in terms of its planning. If they want to keep it in the family as a family-run business, then they have to plan for it. And if the kids all want to go to law school and get an MBA and go work in New York at Wall Street, that kind of messes up the plans, doesn't it?
It really does. And we've been fortunate to team up with the Family Business Center over at CBU in Riverside. We actually helped found that center a couple of years ago with the college, and it's been a rewarding experience. We learned from that, from being a part of that group, that there's more family businesses in the Inland Empire per capita than anywhere else in the country. And that's hard to fathom, but I can see it. A lot of these businesses have not yet sold out to bigger companies, or the big companies haven't come in here because for the longest time, the Inland Empire has kind of been, we're not LA and we're not San Diego and we're not Orange County. People didn't really realize how amazing some of the businesses are out here. They haven't gotten into our backyard yet. We're starting to see them move in now, but it's been great working with CBU and the Family Business Center.
That's good to hear that resource is available because that can be very, very helpful, not only for service providers who are helping small business owners, but also for the small business owners themselves to take advantage of resources there and the entrepreneurial programs that exist at both at UCR and uh, San Bernardino uh, College. So yeah, great that
Yeah.
you're involved with that. You also mentioned mergers and acquisitions because sometimes the idea of family succession isn't going to work out, and sooner or later the patriarch or the matriarch or both, want to retire. So how do you help them in that regard?
Well, here's a big surprise. Not all kids want to follow their parents' footsteps, mine included. And so as businesses are maturing, and we've seen a lot after COVID, kind of that kind of set the stage for a lot of people that have been doing this for a long time, and they just decided it was time that they either sell their business to employees or to competitors or to private equity. And so we've been working with multiple businesses at a time right now, helping to be the in between the business selling and the basically the buyer's group, right? There's a lot of calculation. There's a lot of pushback that goes on in those types of deals, and we're able to put ourselves in the middle and help our clients to hopefully maximize the dollars that they get out of their business.
Okay, I'm going to come back to that in just a moment. I do want to observe that you may have run across this attitude, Matt, at least in my capacity as a lawyer. I often find that folks who are practicing law in Century City, Santa Monica, even downtown Los Angeles think that, we're somehow in a different country. You have to go through passport control somewhere along the way to get out to us. And so they don't really pay attention to the strength of business out here in the Inland Empire. They think it's like a way station for the rail cars and the trucks to move goods somewhere else. Do you find that you encounter that attitude if you're dealing with folks
All
out
all
toward
the
the
time.
ocean?
Yeah, there's an imaginary line between Orange County and Riverside, and then there's another line between Riverside and San Bernardino, which is fine with us because for the longest time, that has helped keep the large accounting firms out of our sandbox. We are starting to see them move out this direction. They're starting to take over smaller firms. Private equity has entered the accounting realm now, and private equity is starting to take over accounting firms as well. And so they realize that there's a lot that happens here in the Inland Empire. There's a lot of great businesses that are not just local to the Inland Empire, but a lot of manufacturers that manufacture and ship products all over the country, and some of them out of the country. So they're starting to see more and more of that. We continue to grow. As soon as one of those firms comes in and takes over another firm, it's like free marketing for us because they come in and they kind of damage the culture, and we get more clients from it. And we're even looking up into the high desert now that we just opened an office in the high desert, which everybody says, why would you go to the high desert? Well, because the high desert is the next San Bernardino Riverside, and we see that. We see the businesses up there and the growth up there, and so we're being proactive and opened up an office up in the high desert to prepare for that.
Very interesting. Yeah, you can see where that would be a logical progression. So Rick, let me turn to you. You are the business broker, so yeah, I saw you nodding along the way with several of the things that Matt was talking about. It was one of the reasons why this good pairing of areas of responsibility. Tell us who you are, what you do, and how you do it.
Yeah, my name's Rick Rael. My wife and I own Transworld Business Advisors of the Inland Empire, and we help small businesses find that exit that they've been working their lives to achieve. So we will work with companies of varying sizes. If you're a $100 million company, you'll probably wind up, finding a investment bank that's going to help you get out of there. But if you're doing $3-4 million and you've been doing this for 20 years, you're kind of a small business for those bigger banks, but not for us. I mean, this is where the heart of America is with the ownership, the who's businesses, the family businesses, as Matt mentioned, that have been in the Inland Empire, the Riverside area for generations in some cases, and they wind up towards the end of their careers. And you're right, the kids don't want to do it. My kids don't want to sell businesses. Um, they are all off doing other things, and most don't want to go and take over that automotive shop or that manufacturing hub or that restaurant or whatever the business may be. So as a business broker, we work with the sellers hopefully in advance, hopefully a couple of years in advance, and we encourage them to get their books in order with their CPA. We encourage them to make sure that their organizations and their entities are in order with their attorneys, and we help guide them from what they're doing. I mean, I don't know anything about how to fix a air conditioning, and I don't think they know anything about how to sell a business. So we work together. My air conditioning crashes, I call them, and when they want to sell their business, they call us. So we work to help them understand the process. We help them to understand the value of their business. Now, I mentioned that I like to work with them a bit earlier, and that's because the earlier we can work with them, a lot of times we can help them build the value of their business. There's things that can be done to really affect the multiple of your earnings that establishes the value of your business. So we can help them, like as you would stage a house. If you're going to sell a house, we can help them stage their business, both how it physically looks and how it looks from a books and records and entity structure standpoint, to make sure they're ready to sell. A buyer doesn't want to come in and clean up a mess. They want a couple of things to clean up that's in their wheelhouse, but they don't want to come in and have to fix a team and fix a sales process and fix an unprofitable business. It's too overwhelming to do that. So engaging a business broker a couple of years in advance of when you want to sell is the best thing you can do. And one thing you may find out is there's not a lot of business brokers out there. The license required to sell a business in the state of California is the same as a real estate license. So there's 450,000 people with real estate licenses in the state of California, and all of them technically can sell a business, but very few of them are trained to do so. That's where we come in with the training that we have. We have extensive training through our headquarters organization. Plus, we are part of the California Association of Business Brokers, which I was president of for a couple of years. And we are working directly with the Department of Real Estate to educate the department themselves, their attorneys, their enforcement people, their executives on the nuances of business brokerage, so that the public doesn't get hurt by someone who doesn't know what they're doing. That one thing that people don't realize is there's fewer than 1,000 business brokers in the state of California. And I will add, there's a lot fewer than that who know what they're doing. So the best thing you can do is when you find a business broker is to check the references and find out who they are, what they've done, what they know, because it's a complicated process to go through a sale, and you really need somebody in your corner who's going to work with you, not try and drag you through kicking and screaming. So it's a fun business, and we get to meet some of the best entrepreneurs in the area. The kind of people who have started, built, and owned small businesses they're the best people out there, and they're so much fun to work with, and we really enjoy helping them achieve their dreams.
You used an interesting phrase about staging the business, which comes from the real estate world, but really, ideally, the business broker, just as Matt was talking about in working with his clients, you want to help position a company for sale at least a couple of years before they actually want to sell, because it takes that long to do the positioning, and the positioning is a much better look than bringing in a few pieces of outside furniture to do the staging, right? So tell us how you ideally would do this, because I think an entrepreneur very much accustomed to doing things his or her way, and not relying on others. They don't know how to sell a business. And oftentimes, I'll come back to this thought too, they don't have any clue what their business is really worth. So the positioning, if they want maximum value, really matters a lot more than the staging. So ideally, when do you get involved, and how do you do that?
Well, I'll start with the easy, and then I'll get into a little bit harder. The easiest part is you got to go and see, what is a buyer going to see when they find out that your business is for sale. First of all, our process is completely confidential. Unlike selling a house or selling any kind of a tangible, asset. When you have a business, there's so much intangible assets that it can be severely damaged if your employees, your customers, or your competitors can find out about a sales happening. So everything we do is very confidential. But with that said, once we've brought in buyer candidates, we've identified buyer candidates, brought them in, we've vetted them for their ability to run the business and the ability to pay for the business or qualify for the lending in order to do that. What are they going to see? So it's cleaning up the place, as it starts, making sure that your street appeal of your business is good, and that street appeal could be a physical store or a factory or a professional office. It can also be your website. They may not see your shop because you might do your business at a client's place of business, but they're going to see your website. And what does that look like? Does it look like it was, built by your neighbor in 1973, or does it look like it's, a really robust look to it? So you go through the visuals of that. That's part of it. That's kind of the easy part. The hard part is to understand how value transfers from a seller to a buyer. And if you're selling a tangible item, 100% of the item transfers. I'm going to sell my car to you. I give you the keys and you take the car, the whole thing. It's really easy to see the transfer of value because all of it goes. But with a business, some of it stays with the seller. If it's Matt's CPA business and Matt leaves, you got a problem. If you have 10 other CPAs and you have a support staff in place and you have a methodology for how the business comes in and it's not based upon Matt, then your value stays and is able to transfer to the buyer. But the word I'm talking about is seller dependency. And the more dependent a business is on the business owner, that's where the staging we have to say, okay, Matt, I'm glad that you meet with every client and do every single client's evaluation of their taxes, but you need to train somebody else to do it. You need to hand it off, and a buyer needs to come in and see how they're going to step in and achieve the value that's part of that. So you have to delegate, Mr. Seller. You have to delegate what you're doing today. You can't make all the decisions. You can't meet with all the clients. You can't direct every employee, and you can't run every invoice. You have to train people to do that, and you have to show the buyer how it's done, and you're able to sit back and observe it. The closer to, sorry, John, the closer to a absentee business is what a buyer is looking for. Now, the only true absentee business is the stock market. So if you really don't want to get involved in your business, go invest in the stock market. But if you want to be involved in your business, even if it's absentee, you have to pay attention to it. You have to be there at least periodically checking in to make sure things are going the right way.
That very good answer to the question that every seller has to face and come to grips with in terms of what do I really have here. So Matt, this just prompts a totally geeky question on my part. To distinguish between price and value, lawyers have generally no clue that there's a difference. But accountants, I know, understand this, and certainly in a way that's more practical than how economists like to talk about the difference between price and value. So, how does that play into, meeting a seller's expectations for what to get out of a business? How do you help them there?
Well, I think Rick said it in the beginning where he said you got to get in early, right? You got to hire somebody, a broker or somebody that knows how to set your business up for sale, right? Because they come up with a different perspective. They're an independent set of eyes. If I'm selling widgets and I think I do a great job selling widgets, somebody else with an independent set of eyes can come and go, yeah, you do a great job selling widgets, but what if you sold them to this other market? Or what if you did something different to stage your business to make it better, faster, stronger? The thing that we run into a lot of times with our clients is that, again, they do a great job manufacturing or doing construction, but that might not be what the market wants. And somebody as a broker can come in and go, but the market wants to see more recurring revenue. They want to see a service component of your business. They want to see you not living through your business, right? Many business owners, I've got a business, therefore I can have my boat and my 3 cars in my business. Well, maybe not, because that's not going to set you up for success when it comes time to sell the business. And so again, that's really how you put the difference between a price and a value. You make your business more valuable. Also, you go through the process of getting ready to go to market. It's like going to the doctor that you didn't want to go to, because somebody's going to come in and say, okay, first of all, we're going to fix your financial statements. Then we're going to fix how you spend money. Then we're going to fix how it's lined up. We're going to get together with the CPA and the business broker and really drill down and say what belongs in your cost of goods sold. Do you really know what it costs you to manufacture or make that product? Because you better know, right? Are you good or are you lucky? And buyers don't want to buy luck. They want to buy good. And that means that I just have to change my mindset that every time I make a product or build something or ship something, I need to know what the real cost of that is so that I can really dial in on my gross profit. And most of our businesses that have gone into an M&A deal and then it fell out because they fall out for various reasons, their business is better than it ever was because they went through this 12 to 16 to 18 month process of fixing their balance sheet, fixing their financial statements, and really understanding their business model. They came out the other side with a much better business. And some of them said, well, I'm not going to sell it now. I'm making more money than I've ever made. Why would I sell it now? And that's just because they went through this process. So I encourage a lot of our clients to, if you ever think you're going to sell your business in the next 10 years, it's never too early to start that process now and understand that process. That makes you so much more valuable on the back end.
We've been using, both of you have used the word fix, which can sometimes make an owner bristle. It's like, I'm doing fine. What do I need to fix? I'm successful, but they don't even understand what makes them successful. At least from an objective standpoint, looking at it for the eyes of a buyer or a disinterested party. So, why is this still doing that? Sorry about that. Where someone doing a business valuation would say, well, yeah, but what are your process? How do you get there? You could be, based on what I see, doing so much better. And that's sometimes a really tough lesson to get across, because people don't want to hear that. How do you address something like that? Rick, I'll go to you first on that, and then Matt, I really want to hear what you have to say about that too.
I think a place where I'm sure Matt and I overlap is when we're taking a look at the books. There's one process where you hire someone to manage your taxes to lower the amount of taxes you pay. So you're going to get great advice on how to use your deductions of your amortization and your depreciation, and how to manage your allowable expenses for your personal. And some people are very close with that, and it's only the strict business things. Other people are a little bit more fast and loose, and they start putting in personal automobiles and personal insurance, and things even start bumping up. Well, there's this travel. I went to Europe because they had a smog shop that I wanted to visit. So I'm going to put my family's European vacation. I mean, it gets pushed to the limits. So you need to be able to fix what they're doing. It's not broken what they're doing, as long as they're doing these things legally. But when they start pushing the envelope, the buyers will look at that. The people doing the quality of earnings on the buyer's side will look at it. They'll start questioning, well, if you're doing this and you're stretching this and you're pushing that envelope over there, what else am I not seeing? And they might go deeper and deeper and deeper and deeper and find things that they don't want to see. So that's part of what fixing looks like on the book side, as we would work together with a CPA to make sure that these books are they're not paying too many taxes, but they're also not playing any shenanigans that could cause a SBA lender to decide not to fund them, and that could be devastating. You have your buyer, you have everything lined up in place. It's a good business, but the SBA says, you've been playing too many games with your books, so we're going to pass on that one, and it could be devastating to a deal. And going back to that value, it can crash your value.
Well, Matt, you're the hall monitor on this. You're the one that keeps them from getting detention because they played too fast and loose because you can't let them do that.
Right. Well, everybody's afraid of paying tax, but in my opinion, you pay a lot of tax, you made a lot of money, right? There's this cost benefit, so to speak. Um, when we work with clients, we always try and number one, we keep the books on accrual basis, right? Accrual is true accounting. Tax is tax, right? We always have book tax differences. And so if you're worried about the tax impact, let us worry about the tax impact. We're going to keep your books on accrual. The second thing that Rick talked about too is if you're doing these vacations or living through the company, you can always at the end of the day go, oh, well, here's all of my ad backs. These are all my dirty little secrets. And the buyer may or may not take that for face value. So we will also step into a client if they say, well, I'm thinking about going to market. All right. When are you going to do that? I'm going to do that in X amount of months. I've got Rick as my broker. Okay, let's do a quality of earnings before we go to market to see what that looks like. And so we'll actually do a quality of earnings study for our clients before they go to market so we can really start digging into what's the buyer side going to find or what are they going to question. And there's a value to that. There's a cost to that, but there's a value to that because then that's going to help that broker. It's going to help Rick sit there and say, okay, here's the things we need to do to put the whipped cream on top of the sundae and make this thing really valuable. The other thing too is clients have this illusion of, oh, if I get $10 million, I'm golden. Well, $10 million doesn't go as far as it used to. And so the other question that we always ask them when we're trying to put this into reality is, I don't care what you sell your business for. What do you want in your pocket after everything is paid for? The broker, the closing cost, the accountant, which is, a big dollar amount. And of course, Uncle Sam, what do you want in your pocket at the end of the day? And then is that going to be enough for your retirement plan or for you to buy the next business you want to buy or for you to be able to travel the world? I don't care what you sell your business for. If you don't have enough money in your pocket at the end of the day, then you should keep on doing what you're doing. And unfortunately, we've had to talk some people out of selling their business because they weren't ready. They had too much debt outside of the business. They get all that money, pay their debt, and they'd be broke, and then they'd be starting over again. So, there's just a lot of things that go in that preliminary. Let's make sure we got a good business to sell, that we understand how it all flows, and that a buyer is going to see value in this business.
Yeah, that's really good advice, and it comes as a real shock because you don't think strategically because you're in the moment of running your business all the time, and so you don't really see the numbers in terms of that ultimate bottom line. What do I want to realize by the time I'm done? And oftentimes, they have a greatly inflated sense of what their business is actually going to sell for, which brings me to the last thing I want to talk about. I say the time flies with these conversations, is the importance of understanding the due diligence process. And I know you've both seen it. Accountants in particular can be very, very helpful in helping their clients get ready to comply with reasonable due diligence requests. And it tells them a lot, if they do it ahead of time, a lot about what they know and don't know about their business. And it can absolutely destroy a deal early on if the disclosures aren't made properly or made quickly. So the broker who's trying to help and say, you got to put all this stuff on the table and not getting it, can't salvage the deal. I mean, how do you approach making sure that your client's ready for due diligence? Rick, I'll start with you and then we'll finish with Matt on that one.
The first thing they could do is make sure they have a qualified CPA. That the quality of the numbers will help with the due diligence. I run across a lot of the smaller business owners who don't even know what a balance sheet is, let alone what the quality of it is. You have people who don't, they confuse capital with inventory. Or if they have inventory, they'll expense all their inventory. And there'll be changes to the inventory from year to year that will look like hits in profit or gains in profit, what they really aren't. And that's where I was talking about accrual methodology. You have to have all that in place. So first thing I do, I can have these conversations, but I'm not a licensed CPA, so I will work with my partners, with the CPA partners, to make sure that they are set up and they understand what they're doing, and they're going to get the maximum value out of their efforts by putting their balance sheet in order and putting their income statement in order and making sure their cash flows are supporting them in a way that can be replicated by a buyer coming through and not having to start from scratch.
Matt, how do you get them ready?
You know what? First of all, you got to have a great team, right? It doesn't do any good if you don't have a good broker, but even more importantly than a good broker and a good CPA is an attorney that understands merger acquisition deals. So many of our clients want to use their business attorney, and business attorneys do not understand merger acquisition. And it's a specialty. And when you get down into the disclosures, like Rick was saying, and you get into the nitty gritty of a deal, you better have a really good merger acquisition attorney in your back pocket. And hopefully that the broker, the CPA, and the attorney work well together as a team, because it is a team effort. And, we've had deals where they don't want to use a qualified attorney, and it makes the deal so painful and stretches out. And then what you wind up with is you wind up with deal fatigue. And especially if you have a very savvy buyer who has a strong team, they're going to grind down the seller. And pretty soon the seller's going to start giving up the bottom line, giving it up, because they just want the deal to be done. And it costs them so much, what they didn't want to spend on that attorney in the front cost them twice as much on the back end, because they didn't have somebody that properly knew how to deal with the buyer side. So, and it doesn't have to be this contentious event between buyer and seller, but it does have to be professional on all levels. And let's face it, you're transacting a deal that involves money. The job of the buyer's attorney is to get a little bit off the top, and the job of the seller's attorney is to make sure that it doesn't slip. And so having a good attorney is extremely important.
And it really does help when you have good attorneys on both sides, because then they're not fighting over stupid stuff. They're both trying to help their clients get the deal done. And I wish I saw that more often than I do.
Yeah. But sometimes they fight over stupid stuff. Let's be honest.
Yeah. No, that's what I say.
Yeah.
But it's usually not the really good ones who will do stuff like that.
Yeah.
It's the ones who don't know any better.
Yeah.
So that brings us to... Go ahead.
I was going to say one small point, is Matt brought up a good point, is not all professionals are fit not all attorneys can handle an M&A deal. It's just like your doctor's you don't go get your eyes fixed by your heart surgeon. There are mergers and professionals in almost, in accounting, there are in law, there is in brokerage, there is in financial planning. So you need people who are experienced in the mergers and acquisition space, regardless of what the expertise is of that professional.
Absolutely. As I say, gentlemen, the time does fly, and we're at the end of our time together today. I want to thank my two guests, Rick Rael and Matt Wilson, for some really good advice for all of you out there listening in. That's it for me, for Professionals of the Inland Empire. So long for now.
Thanks for watching or listening to, depending on the case, the Professionals of the Inland Empire show with your host, John W. Tulac. If you have a suggestion for a guest, email him at jwtulac, that's JWTULAC, @gmail.com. jwtulac @gmail.com.